Happy Monday, folks. As nice as a Monday can be, I'm Bernie, and this is Asia Confidential. You are tuned to. We have double trouble on the show today. Our guest today, my very, very dear friend, Jim Rogers, chairman of Rogers Holdings and author of A Gift to My Children. Good to see you, JR. And, of course, our mutual friend, Kirby Daley, the one and only from New Edge Financial. Sparks will fly on this show, I guarantee you. Today, Jim, my good man, hello. Kirby, my good man, hello. Let's suppose we're on Capitol Hill, and let's suppose, just for argument's sake, that you're a Dem and you're a Republican. Which way would you vote right now? I would be shell-shocked by that.
I'm shell-shocked that I would be either Democrat or Republican. I would vote no. I would have voted no in the beginning with Mr. Bernanke. Mr. Bernanke has never been right about anything in the last 6 years that he's been in Washington.
So there's nothing he's done, nothing he could do to redeem himself ahead of this vote this week. But
he could resign.
He's not going to do that.
He could abolish the Federal Reserve. Then I'd vote for him, yes.
He's not going to do that. Kirby, what do you think?
I think it's no secret I would vote no as well. I mean, I have a page in one of the sort of canned presentations I do. There's a page and a half.
You do canned presentations?
No, but I have a base that I work off of. I'll be accused of that. That is just quote after quote after quote of Bernanke comments, and not only comments, but Bernanke predicting the future path of the U.S. economy and the global economy leading up to this mess. And it shows that he had not even just a slight misunderstanding of what was happening, but a major fundamental misunderstanding of what was coming in this crisis. So if you believe that that is paramount to making decisions that will lead us out of this mess that he's gotten us into on the fiscal side and the monetary policy side, then you have to think he's not necessarily got the acumen to get us out. I would vote no, and Janet Yellen, I think, is a great replacement.
Jim,
not only did he not see it coming, he's one of the major reasons we have this problem.
Very much.
They were printing so much money, they were reducing interest rates to an absurd level. He caused the problem. He didn't see it coming. He doesn't know how to solve the problem. He's going to make it worse. The only good thing about Mr. Bernanke being reappointed is at least he will be around when it gets worse, and then everybody will know the reason for the problem.
Is there something about the appointment of Fed chiefs, perhaps, that the people who get to participate in the confirmation process, they just don't understand what's at stake? In recent history, if he doesn't get the nod, this will be the first time. The toughest vote we've seen was 1983, and it was Volcker, and even then there was only 16 versus overwhelming yays. Do the people in D.C. just have no idea who's in front of them and what he's charged with, what they're supposed to be doing? Sounds like they don't even have a job description laid out.
What do you mean, do they have a clue? Of course they don't have a clue. I mean, why do you think they're in Congress?
I know.
Why do you think they're in politics,
way.
for goodness sake? No, they don't know what's going on. And Mr. Obama doesn't know what's going on. That's why we have these people who don't know how to run an economy.
Mm-hmm. And I will say this, that the team that's taken us this far, voter dissatisfaction, it's more than just health care. The American people are not happy with the direction the country is going economically either. This team is not going to stay together. If Bernanke is approved, which it looks like he will be, Geithner will go. That's my prediction. Within a month, if not 3 months. I think it was in the plan anyway, and that's why we're getting a systematic leak of emails. The idea that Timothy Geithner, as president of the Fed of New York, did not know what was going on under him with the AIG situation, it's a ludicrous idea. Geithner will probably be thrown under the bus.
Term 2 for Bernanke, assuming it goes through, would be different, though, right? I mean, he'll be humbled. He's eaten a certain degree of humble pie.
What? I don't think that's necessarily the case.
You think he's on Virgin Galactic instead of a helicopter now?
Bernie, he went to an Ivy League university. He was an Ivy League professor.
Oh, my God.
He's not humble. What are you talking about? He thinks he's smarter than the rest of us. He's not.
Which is a major problem, because the issue that we are going to face is potential exit strategies when, number one, the economy is not ready for it, the politicians are against it, it's not palatable, and we're going to need it for stability. And he is not the man to take us through that.
Gentlemen, tell me why it's such a wonderful country on top of its game.
Well, it's a wonderful country to live in because they've spent their way into the hole that they're in to make it a wonderful place to live. Unfortunately, it's not sustainable. And it's funny how around the world central banks were looking at potential exit strategies, even though we all know, most of us know anyway, that the global economy is nowhere near able to handle exit strategies. But what we're looking for from the BOJ meeting is, are they going to actually go the other way and expand quantitative easing or expand loan programs or buy more JGBs? So they're clearly nowhere near exiting this. And why is it important? It's important for this reason. The world economy is so interconnected that if the rest of the world wants to start to hike, if they want to start to tighten, even if it's not what the global economy is ready for, if the BOJ stays with their quantitative easing program and zero interest rate policy, there will be enough liquidity to flood the world anyway. So single central banks around the world are largely impotent to really clamping down on a global liquidity problem if the BOJ continues.
Central banks equal impotent. Oh my goodness. You don't like the Fed. You think the Fed should be dismantled. What about the BOJ? Are you a fan?
They all should be dismantled. I mean, the world has gotten along without central banks for centuries, including in the U.S. We've had 3 central banks in the U.S. The first 2 disappeared. This one's going to disappear too. The world would be better off without central banks.
What replaces them?
The market. You and me, all of us, everybody watching this show.
That's exactly
and there'll certainly be problems. There'll be
Mr. Obama would never stand for that, though.
Of course not. But look what the Federal Reserve is doing. It's taking on gigantic debts, which somebody has to pay off. They're printing gigantic amounts of money, which is going to cause problems down the road. At least if we didn't have a central bank, we wouldn't have all this debt being created, and we wouldn't have all this money being printed. And likewise in Japan. Kirby's exactly right. This Bank of Japan has printed huge amounts of money for 20 years now.
Is this a new revelation? You sound like you're getting more extreme as you start to grow up.
I find it extreme that we have central banks. As I said, for centuries we haven't had central banks. America's had 3. The first 2 failed. The extreme is to have a central bank, if you ask me.
You don't quite agree with that, do you, Kirby? Because the fact is you have to deal with the parameters which you're handed, and there are some. See, Jim's a little different. Jim can say anything he wants. He doesn't work for a bank. He works for himself, and he can say whatever he wants, unfettered, unbridled. You and I, we work within parameters and systems. There are limits, unfortunately, in life.
Yeah, I don't think I can be accused of really towing any company line in my comments. I would hope not anyway. But I honestly haven't really looked into the issue of how it would all work without the Fed and without central banks, simply because it's not really going to happen in the immediate future, and there are so many other things to look at right now. But you know what? Seeing what central banks around the world have done, especially the BOJ and the Fed, to really put the system at risk, I can't disagree with what Jim says. The reality of it happening, it probably will come to pass, but at what point, I don't know. For now, we need to worry about what this Fed is going to do to get us out of the mess that they've helped to create.
Kirby's right. It's not going to disappear anytime soon. But mark my words, between Greenspan and Bernanke, they're ruining the central bank system in America, and it's going to disappear.
You're not obviously a fan of the activist approach that the administration has been taking. That's one industry after another. It's one initiative after another. It was kind of funny, but the day the Dems lost a very key by-election last week in Massachusetts, I mean, you could see the look on their faces. They had this dark gray pallor which came over them. The next thing you knew, okay, we're going to really, really crunch the vice on the banks now. I mean, it's full steam ahead.
Well, that's one of the reasons they lost the election, because everybody's furious that the amount of debt that's been taking place, the bailouts that have been taking place, that haven't worked, that will not work. They're making the same mistakes that Japan made in the 1990s. They're propping up all the zombie companies and zombie banks, and it's not working. Everybody knows it's not working, except the people in Washington.
You and I have had this conversation that you actually think that Obama might be right on this front, and we'll get into it in detail later.
Yeah, Massachusetts was massive. But if the result of that is that Volcker is brought back into the fold to really bring some sanity in, and Obama starts to back, even if it's for political reasons, a deficit reduction committee, and bring some sanity back into what's happening, then that's a great byproduct of what's happening. I am very suspicious of the motives behind and their ability to really follow through on this. But I'll tell you what, it is certainly the first thing that I've seen this administration do that has some sanity.
Okay. Kirby, do you think that, actually, in the last couple of weeks, I've heard a lot of people pass by this stage, or pass by the studio and tell me that, the story is intact. It's a great story. The Mark Mobius type story. Do you know the difference between Slovenia and Slovakia and all that? But at a certain price, even the most attractive tale in the world becomes a bit untenable. What do you think? Kirby?
Well, look, I'm not even a buyer of Japan at its valuation, so emerging markets to me are way out in the stratosphere, just to comment on Jason's story. But look, we have two types of economists. I coined this term last summer. They're robo-economists. There's one type that's very insidious, and that is the kind of robo-economist who is programmed by his bank to spin the economic data, which can be spun very effectively to tell a story that's not true, to sell products, and to keep a story alive. And a lot of that is in conjunction with the story being told by the U.S. government. The other kind of robo-economist takes a look at the data, looks at it in the paradigm that nothing is different this time, that because we're seeing employment being a lagging indicator, that this time it will be a lagging indicator, and it will be coming out in 2010 as one of the strong drivers of the economy. That's just misinformation. The other is disinformation. Either way, it's what I call a robo-economist. That's the story we largely hear from these chairs right here, I'm sorry to say. It's not true. It's different this time. Anyone who says, I feel like I need a shower. Anyone who says that the second half of this year is going to be stronger than the first half is betting that more stimulus will be coming into the market without extended buying programs from the Fed of mortgage-backed securities, an extended or expanded role of the government in mortgages in the U.S., a jobs program that will cost hundreds of billions of dollars. We will have a double-dip recession in the U.S. The thing is, we're likely to get more stimulus and extended programs. So who's right, who's wrong? The fact is this: it is not a self-sustaining economic cycle that we have entered. And when we're told that story, you're buying into it, you're going to get hurt unless it's extended, which will cost us later.
Boy, he's just a bundle of joy, isn't he?
Well, I'm not buying stock markets anywhere in the world. I'm not buying. In fact, I have bought no stocks since November of 2008 anywhere in the world. And I certainly would not buy India at this point, but I wouldn't have bought it last year either. And it went up a whole lot. The only thing that I can see, and I happen to think Kirby's right, that we will have economic problems and the governments will print more money at that point, and that's going to lead to good things for hard assets, for real assets. When you print money, the money's got to go somewhere. It's not going into General Motors. It's going to go into zinc or wheat or whatever.
You're sticking with your guns on this one. You
Well,
haven't bought a single stock in almost 2 years?
No,
18 months.
November, no, well,
okay,
14
whatever.
months, 14 months. November of
You missed a
2000.
lot of money in
Well, wait, but I
2009.
deal with a lot of commodities. Commodities have gone through the roof in that period of time because, look, if the world economy gets better, commodities are going to do well. If the world economy does not get better, commodities are going to do okay because they're printing so much money. And as Kirby says, they will print even more money if the world economy doesn't get better. That money is going to go into cotton or whatever it's going into.
I'm going to, you know what I'm going to, you see, the easy question, the obvious question at this point to Jim Kirby would be, but man, commodities are starting to take a whack these days. And if I fired that question at him, I know Jim so well. You know what he'd tell me? He goes, Bernie, they're going to go up and down. I don't know. You know, I'm not that smart. I can't really time the markets and that sort of thing. But I know one thing. These things go in cycles. One thing that isn't cycling downwards is the number of people who are getting more liquidity and getting richer and that want to eat better, that want more sugar. Do I get an A?
By all means, maybe I should be the interviewer and you should be the, we can
I know
answer
you
the
both
questions.
wanted my job.
No, I couldn't get your job.
But he's sticking with your guns, and you're also sticking with your guns. I haven't heard anybody talk about a double dip. I got to tell you, everybody I talk to, 98% of the people say we're through it. It's going to be
What more
slow
do
and
you
slow.
need?
Huh?
What more do you need to know? 98% of the people say we're through it. Please, Bernie, come on.
And the big caveat
The
there
law
is
of
more
averages says
stimulus.
they're right, but I'm being told they're wrong.
Exactly. The big caveat there is more stimulus. We can buy ourselves an economic recovery like we did this year. Every statistic we've seen, as I said last time on this show, has been bought. The mistake I made is I said it's bought and paid for. It's not paid for. It has been bought. We didn't earn anything.
Bernie, what are they going to do when the problems come back? They're going to quintuple the debt again? They're going to, print even more money?
And the
I mean,
stimulus will be
system's
less
not gonna
effective
take it.
anyway then.
At
That's
that
right.
point, the numbers
That's
will be
right.
so bad, nobody will notice the extra zeros.
They already
If you
don't.
threw a number in front of people, difference between trillion and quadrillion, nobody would notice. I guarantee you that.
Okay, maybe most people wouldn't notice, but the market would know, because the market knows that if you continue to add debt and you continue to print money, it's going to cause a problem.
Hopefully voters will notice. If the voters in the U.S. notice and they stick to their guns on this, and it wasn't just health care, then maybe we'll begin to see some sanity.
And can you imagine that in a liberal state like Massachusetts, they're the first ones who notice?
It was
All right, no. Back to Jim and Kirby, and we picking up where we were talking a second ago about, timing the markets, forget it. You haven't been in stocks for a while. You just don't trust what's out there. You don't trust the pricing. You're saying Is it a W? Are we talking W again in terms of the shape of the recovery? Or
I don't see this side of the W. That's the problem. I see, as
well,
I said,
where are we?
it's
Right?
going down
Where are
into
we
your
right now
EKG.
anyway?
What you hope is your EKG. And the first bounce has been with a shot of adrenaline. It's reflected that. Those are going to be shallower and shallower bumps along the way out.
Yeah.
And this is now extended from what we've done for at least a decade.
Marty,
It could be longer.
The people who are getting the money are better off right now. The government's been throwing a lot of money out into the system. Anybody who gets that is better off. But ultimately, that money's got to come from somewhere, and we're all going to realize that things are going to be worse in the future, not better.
Who's getting the money?
Well, you know who's getting the money. In America, there's a lot of make-work projects. Something like 40% of it is going to the states, so they don't have to fire bureaucrats. I mean, how is that going to improve the American economy and the competitive state of America by hiring a bunch of bureaucrats or keeping a bunch of bureaucrats?
Well, it gives the illusion of keeping things going. Sometimes you just have to do something. Remember, like Forrest Gump, you just got to keep running and running and running.
In the
you got to do
past, that
something.
worked, but this time the system, the debt hasn't been worked through, and that's my message again and again. We have to work through the debt to get to the point where we can get on a sustainable, self-fulfilling cycle of consumption and production.
The idea
there is no money, there is no firepower for the consumer. Please.
The idea that you can solve a problem of too much debt and too much consumption with more debt and more consumption defies comprehension, at least as far as I'm concerned. You've got to liquidate the bad assets. You've got to liquidate the problems. And then you start over. You let the competent people take over the assets, reorganize, and you start over. Don't just give the money to incompetent people and let them continue doing what they were doing before.
What kind of model are we talking about here? Like a resolution trust corporation for the global economy, or what exactly? I'm just trying to use something analogous here just to be able to absorb this.
Well, in Scandinavia, when they had this problem in the early 90s, they let everybody go bankrupt. They had a horrible 2 or 3 years. Korea had the same thing. They had a horrible 2 or 3 years, but they let people go bankrupt. They didn't have any choice. They came out. Russia did the same thing. Mexico. I mean, this has happened to lots of people in the past. You let people have. It's a lot of pain. Don't get me wrong. It's a terrible 2 or 3 years. But at least when you come out, then you can have a stable and sound system. Not what Japan did. Japan tried it. It didn't work.
They just let Japan Airlines go bankrupt. Now, that could be a change of attitude, right? That's an improvement of sorts there. Something that was artificially held up like 3 or 4 times before. Is the world starting to take notice that you can't be propping up these corpses forever?
Well, let's see. I mean, the Bank of Japan is continuing to buy government bonds and continuing to print money. Let's see. I suspect they're going to continue to do the same thing. You can ask me in a year and we'll know.
Open season on bankers. Gentlemen, your perspective on this issue. Kirby, first of all, you're a banker. Well, of sorts.
Well, look, it's open season on bankers. It's open season on systemic risk and too big to fail, in my view. And if in the crossfire, some bankers' bonuses get hit, well, that's part of the game. We need to really address those issues. And the complacency that crept into the market due to the stimulus-driven recovery meant that we ignored that for a long time. And again, if it took Massachusetts, I wish the president had given it at least a month so that it looked like he was making a sound, thoughtful decision instead of bringing Volcker back the day after having shunned him for months and brought this up. So then it can look a little bit dubious and political, because this is what we need to address. So it's not open season on bankers. It's open season on systemic risk and too big to fail. And that's great.
Had they let people fail, we wouldn't have these big bonuses, et cetera, going on right now. The idea that you give all this money to save these guys so they can keep their Lamborghinis is outrageous. And by the way, what the one result of all this is going to be is that more and more business is going to Asia. It's part of the shift from America to Asia, and just you put the American banks out of business, it'll make them less competitive. More and more people will do their business in Asia.
You know, that's true. So much business is coming to Asia, but it's not like to use China as an example. It's not like they're a poster child. Look at the kind of lending that's created the kind of economic cyclone that is enveloped us. I mean, look at the numbers from last week. This is not a panacea, is it? I mean, everybody's making policy errors all over the place. It's like we're shooting at ducks in a gallery, but we're not pinging them where they need to be.
Well, no, you're exactly right. Look at what's happened in Hong Kong and Shanghai. I mean, real estate's gone through the roof. We have a big bubble. I see 2 bubbles in the world. One is Chinese real estate, and one is the American government bond market. But I don't see any other bubbles anywhere.
Yeah, I see. My home's on the market. I was hoping you would hold off on that until I sold it, and then bring the market down, and then I get into what I want. Jim, can you turn your coat pockets inside out?
I'm not going to show you.
I want to see what's in. Come on.
Well, I actually have something. I do have sugar in my
Sugar.
coat because I'm taking it home to my children. I got some free sugar from Bloomberg this morning.
Shh, don't tell the big guy. There we go. There we go. There we go. You still walk around. Is this a Krugerrand? No, it's a maple leaf here. It's beautiful. You know, you're almost like a refugee. You know, you think the world's going to bomb as you're at an airport.
You never know. You never know, do you?
Here, I'll keep that.
No, it's for my wife, not yours.
Oh, okay. Do you buy that postulate there? Platinum? Are you watching the platinum space?
Well, I'm not buying any of them right now because the gold went up a whole lot and made all-time highs back in, November. If I had to buy something, I'd rather buy palladium or platinum or silver than gold. I own them all, as you know, but I'm not selling any of them.
You know, by the way, before I let Kirby get in on, before I bring Kirby in on this, you have this annoying habit of buying stuff and never actually selling it. Do you realize that?
Well, no, I don't like to sell. I don't like to sell things. I'm not very good at.
How do you pay your bills? Don't you need cash?
I have a little money laid aside for my bills. I can pay my bills. Yes.
Well, look, if you're going to argue that.
By the way, folks, you know, Zeb, my wife in platinum and diamonds, Kirby's wife.
Exactly. She's become markedly more bearish since I explained to her what an Armageddon hedge is and that I want jewels, precious stones in that Armageddon hedge. She reminds me of that all the time, how bearish she is. I would say that if you're buying platinum and you're looking for a mean reversion of the spread between gold and platinum, you need to keep two things in mind. Number one, this economic recovery may not be real. And the industrial demand for platinum may not be quite as robust as some people are figuring in. And number two, the dynamics behind the purchases of gold this time, it's been very emotionally driven, again, for reasons like Armageddon hedge. It's much more widespread into the mainstream, into the middle class and normal people who don't actually typically enter the market buying physical gold across the U.S. and in other countries. And they may not just jump over to platinum because of the price discrepancies, because gold means a lot more to them.
But Kirby and Bernie, I made a speech in Prague recently, in November, in fact.
Beautiful place.
There were 300 big-time money managers there, big hitters, and we did a survey. It said, how many of you have ever owned gold? 74% of them had never owned gold. So nobody owns gold yet. I mean, yeah, it's gone up, and some people own gold, but 74% of the 300 of the biggest time money managers in the world had never owned gold. So gold is not in a bubble. I mean, nobody owns gold yet. Wait till everybody owns it.
What does that tell you, that 3/4 of them have never owned gold?
It means that there's still a big market. Someday, we're going to go in there and do that survey, and they're going to be 74% own gold, and then it'll be getting towards the top.
It makes me worry about the average mentality among the run-of-the-mill money managers. And these aren't run-of-the-mill, are they?
No, these are not run-of-the-mill. These were big hitters. They were all big hitters and successful people, but they never owned gold. It's not as though they'd owned it once or twice. They never owned it. So the gold market is still untouched by investors.
But actually, isn't it true that with gold, you have to have a certain fear factor, like the debasement of currencies, like these governments are driving your economies into the ground. When things start to pick up, everybody thinks in terms of the way they relate to the world. If my mortgage is up to date, if my lawn is green, if my car is running nicely, if I've got a little leftover money to buy toys for the kids, I don't have a problem.
You're in the minority.
Well, no, I'm just saying it's a pretty humble kind of picture.
Exactly.
But I'm not going to go. There's no Armageddon. I'm not going to go, punting money on gold when I'm in that kind of a situation. And more people are like that than they were last year. It's the unknown that drives things like gold, right, Jim?
Well, you're supposed to buy things that go up. I mean, gold is making near all-time highs. You'd be better off having owned gold for the past few years rather than General Motors or Citibank, to pick a couple of at random.
How many of those do you have in your pocket, by the way?
Only one, just for you. I knew you would ask.
Well, I'm not gonna broadcast your itinerary or your route out of this. It's almost like Goldfinger. You ever watch Goldfinger? Did you read
Long time ago.
Goldfinger, he's the man.
Right, very long time.
The man with the Midas touch. Midas touch. The stuff. Gentlemen, little potpourri in this section, if you will, with viewers from all over the world. And I'm going to go in no particular order here. In fact, everybody took the bait and just wrote in the last few seconds here. China and gold. Jim, do you think China will buy mainly gold rather than mainly gold locally rather than worldwide, and to what percentage of reserves? Dick from the state of Missouri.
It doesn't matter where they buy the gold. Gold is an international market, and if gold goes, if they buy it in New Zealand, they buy it in China.
You believe that? You don't believe in the gold antitrust action argument that central banks are artificially manipulating down?
No, of course not.
Price gold?
No. I know that, there are always people who have conspiracy theories. No, I don't buy that one.
Okay.
But my point is, wherever the Chinese buy their gold, it's going to make the price of gold firm, because gold is gold. It's all over the world.
Okay. What's the best way to invest in commodities for food, agriculture, and other resources outside the metals? So somebody, obviously a repeat viewer writing in again, recognizes this theme that you've hammered away at consistently.
Well, for most people, you should buy an index. That applies to whether you're buying stocks or China or Germany or whatever. Index investing outperforms 70 or 80% of active managers year after year after year. So that's what I do, and I would suggest that most people should do it too. If you're a great individual commodity picker, sure, pick the ones that are going to go through the roof the most.
Okay.
Most people are not. I'm not.
Yeah, I tend to look at commodities as an tradable asset class, and if you get volatility, then you can make money. I don't look at it as investing in it. I look at it right now. For example, look at the ags. Look at soybeans, corn, and wheat. You have not only a strengthening dollar, which is a tailwind, a headwind, but a tailwind behind the drop in prices. But then you look at the fundamentals. You have soybeans, as we talked about a couple of months ago on here, the biggest crop ever in the history of the world in South America, in the history of South America. At that time in the ground, now being harvested, it's going to drive soybeans down further. So if you're long only, then you're going to run into some trouble. You should also look at commodities as a tradable asset class. It's very dangerous, but there are more ways than just buying the index, which is a fabulous way. You can also make money by playing the undulations of the market.
Okay, Jim, Kirby, here's one from Thurber, who just wrote in the last few seconds here. Any opinion as to why the U.S. dollar appears to be stronger than one might assume it really should be? They feel there's some shenanigans going on out there. Kirby, this is down your alley.
Well, look, we have what's the risk-on, risk-off trade that's been going on for a few years now, and it correlates very nicely. And right now we're headed into risk aversion, so the dollar is getting some tailwinds because of that. The dollar is strengthening. You get the dollar, you get the yen, you get both strengthening. You get dollar falling, you should get bonds rising. And you should see, again, commodities falling as a result of all of this in the risk aversion trade. That is putting a tailwind behind the dollar. Overall, long term, that is not going to be what drives the dollar. It's going to be what the Fed does, what Mr. Bernanke does, and how we resolve this.
I happen to be very, very bearish on the dollar, but I am long the dollar. I own more dollars than I did 2 or 3 or 4 months ago, mainly because there's so many bears, including me. The dollar is a terribly flawed currency. It's going to have huge problems over the next several years, but at the moment, there's so many bears that it's bound to have a rally.
Okay. Let me pick up one here from Ed, who writes in from Illinois, talking about gold again, because obviously that's stuck with a lot of viewers. What are the risks of owning the ETF like GLD if they invest in gold bars? Is there any downside? Do you like gold ETFs?
Well, there are many ways to invest in gold. You can have it in your pocket like I do. You can buy futures.
Yeah, you're asking about ETFs. He walks around with a big stash of it. What are you talking about?
You can buy ETFs. You can buy gold companies. You can buy gold bars. There's obviously, if you buy a piece of paper, there's some kind of risk. Somebody could steal the gold out of the vault. I mean, all sorts of things can go wrong. But it's the little that I know, and I don't own the gold ETF, but as far as I can see, they're reasonably safe. I don't think somebody's going to steal the gold out of the vault.
One hopes.
One hopes, yeah.
Obviously. Kirby, let me throw one to you. Raymond writes in, USD, JPY, dollar, yen, vice versa.
Yeah, exactly. The yen is very difficult because right now you have a finance minister who's come in who's talking against what the entire base of the financial and economic policies of his own party are supposed to be. And we don't know where that's going to lead. If we see some intervention, if the MOF decides to tell the BOJ to intervene in the market, then we're going to see a lot of volatility. But overall, watch the risk aversion trade, and that means that the yen has more strengthening to do if risk aversion comes back.
Okay. By the way, I own the yen. The yen and the U.S. dollar are 2 currencies that I own and expect to do well for a while. But longer term, they're both going to be disasters.
They're the most flawed longer term. That's what's so perverse about it. I own them both as well.
It's weird with the yen, isn't it? I mean, the whole country hates it, the government hates it, the exporters hate it and everything, and it's still, 4 yen stronger than it's been for.
I'd rather own the yen than a lot of other, well, I own the yen, so we'll see. Ask me in a couple of years.
Final thoughts, without the emails. What did we learn from each other today?
Buy low and sell high.
I started my career out with that one. You telling me I didn't go nowhere?
That's Kirby. Kirby's smarter than I am.
That's very rich. I would say this. Look, I think we're both in agreement here. You have two camps out there right now, and whether or not I got a little carried away, and I do truly believe that there is a story being spun out there. Whatever you do, you need as an investor to really take stock, look at the overall situation before you get on, and believe that this economic recovery is self-sustaining. Sustainability is what it's all about, and a recession, even a partial depression, is not a bad thing. We need it to clean the system out.
Gentlemen, thank you very much for the FaceTime. You know what we should do next time? We're going to go with Jim to China, and we're going to do a show from a rice paddy or a farm in China. That's where he thinks the future is. All right? Be well, my friends.
Let's do it. Let's do it.